Good morning, colleagues. So, today we are talking about credit risk and in the context of pandemics and also beyond the context of pandemics. I would like to share with you the considerations of the National Bank of Ukraine about what we are seeing about the quality of a credit portfolio. What are our expectations and also in which way the National Bank as regards the rules for credit risk assessment, which changes were introduced by NBU and which changes eventually are planned for the future. Generally, I would like to start from making a little bit of advertisement for our financial stability report published by us just a couple of weeks ago. Why I want to advertise? Because it contains a lot of information on our expectations and our vision of situation about the quality of credit portfolio, both of corporate one and households and individual loans portfolio. Briefly speaking, our conclusion is, upon the result of this crisis, about 10% of the portfolio practically in each segment, not absolutely in all of them, but in most of them, could become non-performing. So those are credits which may come to NPL category. It means that final aggregate credit loss will make a part of those NPLs come back to a performing category, but we provided such guidances for the banking sector to consider. If it will happen that our assessment will be too much pessimistic, it will be a pleasant surprise for us. But our statistic calculations using historic data, at least, including the data based upon two precedent crises, shows that this is the scale of credit loss we should be guided by. The crisis changed a lot the relationships between the borrowers and the banks. I believe you, being bankers, know about all that. A lot of borrowers are passing through the period of essential challenges. And for somebody, those challenges will last for a few quarters, eventually for 1 year, and for somebody else, they might be temporary. Meaning a lot of businesses and sectors and companies therein should come for this first most difficult period of crisis, which started in the beginning in the middle of March. And according to our expectations and expectations of the bank, after passing this most difficult period, after mitigation of quarantine conditions which already took place, these businesses and enterprises should already come back to their normal work and should start to service their credits, their loans. That is why the National Bank adopted the Regulation 39, which established specific rules of 351 regulation about credit risk assessment. We understood that coming to new normal state with new realities of our bank's lives and the relevant restructuring will be conditioned exactly by some temporary factors. That's why we, as same as many other regulators, we decided to temporarily mitigate our requirements for the assessment of credit risk about such restructurings. And basically we said that for a certain period up to the end of September, we shall not apply certain criteria of high credit risks, some default criteria. So to give the banks the maximum space and maximum possibilities to act in sense of restructuring for the sake of businesses and households. Also, in our lecture, we communicated very clearly that we believe it acceptable when the banks are conducting short-term restructurings in the initial stage, mainly just the deferment of payment, principal or interests. And after that, when more clearness comes and understanding on how the implications will happen to be for businesses and entities, the banks could already conduct long-term restructuring to reschedule the payments for many quarters or years ahead, to review the interest rates, to change other conditions of loan agreements. And we established a single hard restriction for such restructurings. We said that the net value of cash flows after restructuring should not reduce more than by 10%. If this condition is adhered to, the banks have a full freedom of action. Any restructuring not foreseen NPD discount of more than 10% will be believed as acceptable one. Basically, we do understand, we do realize that the banks, after our communication with them, are using this regulation, this resolution very actively. And here I would like to stress upon an important position. We do expect that the banks will use this resolution number 39 to conduct the so-called viable restructuring, meaning the restructuring which will finally help to renew the timely servicing of loans, will allow the companies, the borrowers, to pass the most acute phase of crisis, to renew their financial state, and to come back to normal, timely, and regular servicing of credits. We would not like this resolution to be used to hide loans which, in the opinion of bank, should be immediately classified as non-performing ones. I believe each bank has a certain category of loans which, and now we can clearly talk about this, will hardly be serviced, will hardly be repaid normally.